All right, good evening, everybody. All right, I'm waiting for you in class. If you can hear my voice, I'd like you to just type 1 in the comment section. You can hear my voice, you can see my face. I'd like you to just type 1 in the comment section. Just type 1 in the comment section, and then we continue from there. Type me 1 in the comment section. All right. So who else is online? Yeah, I can see somebody is there. Who else is watching me? If you can hear my voice, I'd like you to just type 1 in the comment section. Just type 1 in the comment section. All right, who else is in class? Just type 1 in the comment section if you're in class. I want to be sure. All right, I want to be sure. Okay, I'll wait for some people to join us. So if you can hear me, I'd like you to just type 1 in the comment section. Just type 1 in the comment section. All right. More people are joining. If you can hear me, just type 1 in the comment section. Just type 1. Just type 1 in the comment section. Right. All right. I can see. All right. I sent you a video the other time. First of all, I told you my slide was deleted, so preparing the slide all over again is not quite easy, and it takes a lot of time. And already I'm used to slide, and it helped me to teach with arranged thoughts, because you see what I'm trying to achieve. I'm not just trying to teach you something. I'm trying to program your mind. Many of us who have been here for a while, if you there's certain thing we've understood in the market, that if you are just coming, we're not likely to make the same mistakes that we made. We're not likely to make the same mistake that you make, and we like it to be profitable. We want it to be profitable. We want it to make profits. But you see, the market was designed to punish those who don't understand the game. That's the design of the market. That is the design of the market. It was designed to punish, to sap the market of those who don't understand the game. And you need to understand that and prepare your mind. I know that this is real business. And how can you make more profit than you are winning? That's only possible if you are well equipped, if your mind is programmed, adequately programmed. And that's what I'm trying to achieve here. So I broke the teaching down systematically. I remember, the guy was saying the other time I should come and teach him how to trade. And I was asking how long will it take to go through a master course. And I said, 4 weeks. Actually, I said 6 weeks. 6 weeks. I'm like, no, guys. I just want to learn maybe 1 week. I learn everything 1 week. I said, no, I cannot teach you 1 week. And then he went away. He was ready to pay. He had the money to pay. I said, no. Because you see, that's the same attitude they've taken to everywhere and there. They just want to learn something 5 minutes. I think everything they need to learn, they already learned it. No, it doesn't work like that. It doesn't work like that. Okay. So that's what I'm trying to do. So I'd like to make sure you go through all the studies, all the videos you've recorded, one after the other. Don't jump. Just follow those teachings, follow them one after the other. They're already arranged. Okay. And then, now every single teaching that we had, you still have the video. So you can actually painstakingly watch the video, make your jottings, then apply them and watch them. Now, in the last two classes, I literally jumped into what I call the price action trading. Price action trading. Price action trading is the most uh, professional way of trading. The most professional way of trading. When you literally use the movement of price to determine your entry and exit. Okay. When you use less of indicators, or probably you use no indicator at all. Okay. Right from many years ago, I knew that it is great to be a naked trader. I usually call myself a naked trader years back because I came across that philosophy of naked trading. Okay, while you don't use any indicator, you never see There's one particular time I was teaching in a class, and then I was teaching them how to use indicator, and maybe the following day, I was trying to show something online. So I snapped the 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 trade we were taking on that particular MetaTrader, and then somebody saw the screenshot and came to my DM and said, "Ah, sir, what is the setting of this indicator that was on my screen?" The first question is, he did not ask whether I took that trade based on indicator or not. He just asked me for the setting and I just gave him the setting of the indicator. And he was thinking maybe that's what I used to trade, get my entry and exit. No, that's not what I used to trade. And so I like to share my slide with you. So we started talking about naked trading, price action trading. And price action trading is very important because it makes you to trade professionally. It makes you to be able to catch the wave from the beginning. You catch the trend at the very beginning of it. And that's the most interesting thing about price action. Every other indicator you use will only be, I told you the other time, they're either lagging or they're leading indicator that will respond to a spike. And then you've already entered because based on the spike, and then they continue and the market continue in the direction of, in the previous direction. And then that's what they call leading indicator. They're so sharp, they're so fast. And some are lagging in the sense that the price already moved, is already moving. They now tell you, okay, price is moving based on the data that they have got. But then when you're a price action trader, you can catch from the very first peep. You can catch the wave from the very first peep. Aggressive traders in the forex market, they can catch the wave from the very beginning of a trend and ride on it, make massive, crazy profit, riding on the wave. And that's a beautiful part of it. You're able to catch the wave from the beginning. And then when something goes wrong, you can tell why. You can tell why. Why is this thing wrong? Why did I lose that trade? What happened? Okay. And that's the beauty of price action trading. It's the most professional way of trading. And it's not difficult. Many people run away from price action. I remember years ago, I was running away from price action because it looks complex. It looks so many things to do. Any fucking person just like to use indicator. When this one does this way, I enter. When this one does this way, I enter. When I see this one, like this one, when I see RSI, there's flow between this number and this number, I will buy, then I will close with no. It's quite easy. You don't have to think with those indicators. Just look. You don't have to think. You don't need candle anatomy, candle formations. Like now in this class now, I'm also going to be teaching you 20 candles, 20 reversal candles you must memorize. I've already started in the other class. Okay? I'll be teaching you 20 candles that must not leave your mind. That if you master those candles, it's as if you have money ritual in your house. I'm telling you. It's important. It's important. And you must understand that price action there's so many parameters that work together. But they say there's nothing difficult about it. It only takes a while to study and to learn it. Take a while to study and learn price action. And the moment you learn it, see, there is no trading is not difficult. And though it looks but then it looked like a new language. I only relate it with a new language, learn a new language or learning to drive a car. The first few times you attempted driving a car, you know how you feel. And then the moment you master it, it's so simple. It's so simple. You can maneuver it anywhere, anyway. And like you're learning a new language, you know, you enter a new country where you don't even understand their language at all. And you have to learn it from the most basic, the most alphabet, the most basic. And then before you know it, now you begin to speak the language fluently and eloquently. That's how it works. The same thing for trading. You need to learn these parameters. And if you approach it like I'm approaching it, I want to learn this thing. Not that I want to see, it doesn't begin with I want to make money. I want to learn it and make money. It's different from I just want to make money. People came here and with the intention I just want to make money and get away from here. But the best approach is I want to learn this thing and use it to make money after I've known it. And that makes all the difference. I'm telling you, that makes all the difference. I remember a particular time I just withdrew from everybody else just to relearn, to relearn, to relearn. I was back testing 5 years, 10 years. I was sitting down with on my desk, learning every day, just studying books and studying materials and back testing. And then I'll back test again. I will give myself another assignment to back test again. Another 5 years. I can pick 10 instruments. I mark out 5 years. I have notebook where I was marking which one have I which one have I back tested. I will mark it. I will mark it. At a particular time, I would complete a particular instrument for 5 years. The time came when I was not doing 1 year here, 1 year here, 1 year here, 1 year here. And now why? Because whatever strategy you have that you use to trade, it must be permanently registered in your subconsciousness. If you don't have it in your subconsciousness, you will forget it when you are already in the market, because the movement of the price at the moment you are looking at the market is enough to derail you, to distract you. You don't know exactly what you're looking for. So you must test it again and again. And let me tell you something, honestly, it's not difficult. It's not difficult. It's not difficult. Especially the technical aspect is not difficult. So let me share with you the next phase of price action trading. All right, you can see my screen now. Can you see my screen now? If you can see my screen, you see trendline on my screen, just type 2 in the comment section. Just let me type 2 in the comment section. If you can see my screen, just type 2 in the comment section. 2 in the comment section. I want to see 2 in the comment section if you can see my screen. All right. Okay. Now, trading with trend lines. Trading with trend lines. This is one of the tools that you have to fall in love with. You have to fall in love with trend lines, honestly speaking. Okay, honestly speaking. As I came in from the office now, I closed a trade. I think crashed 500. And what took me to enter that trade was just trend lines. You need to fall in love with. I need to study trend lines and fall in love with it and get to know how exactly it's drawn. Okay, it's just a tool. It's just a tool on your MetaTrader that can use and maximize the use of it. And there are two types of trendline trading. There is the trendline bounce. That is when the price moves in the direction, of the trend line. Okay, in the previous direction, as in trendline bounce. Price touches it and moves in the direction of the main trend, major trend. That's the trendline bounce. And then we also have the trendline breakout. Trendline breakout is remarkable. Okay, we're still going to be getting there. and we are moving gradually. So trend line trading is a subject that you cannot put aside if you want to be very profitable trading financial markets. You cannot push it aside and you must study it. As a benefit of trend line trading, number one, it's very simple to use. Very simple to use. There is no ambiguity. And let me tell you something that you must register in your mind. Trend line does not lie. Trend line does not tell lie. It does not lie. It's very simple to use. Trend line is super simple to use. It provides high probability and high accurate setup. When trend line tells you to buy, just buy. When it tells you to sell, just sell. It's so accurate. It's pinpoint. The pinpoint accurate. It gives you accurate setups. Okay. Number three, it is price driven only. It's price driven only. And you can use trend line on its own in isolation. It can function perfectly well independently. Trend line. Okay. And then number four, it works on all time frames. It works on all time frames. And number five, it works on all currency pairs and all indices. It works on all currency pairs and all indices. Trend line. You can use to trade anything. It works on currency pairs. It works on gold. It works on commodities. It works on stocks. It works on bonds. It works on future. There is no instrument on which you cannot use trend lines. And it works on all time frame, depending on the kind of trader you are. If a scalper, you'll be using 1 minute, 5 minutes. If a day trader, you'll be using 4 hours, 1 hour, and 15 minutes. Okay. If a swing trader, you'll be using 4 hours and daily time frames and weekly time frames. If an investor, then start using weekly and monthly time frames. It works on all time frame and is remarkable. One of the things I like about trendline is that it does not lag. It doesn't lag. It's just so accurate. It's just so pinpoint. I'm telling you. And then trading trend line. Common mistake in drawing trend lines. And this is where people miss it. Okay? This is where people miss it. They're drawing trend line through obstruction. Many times they want to sink the trend line to the market instead of allowing it to play out on its own. Don't force the trend line in. Don't force it in. Allow it to flow. Don't force it in. Draw it without obstruction, especially between not be obstruction. There must not be obstruction. It should not, and it must not. It should not pass through the wick of the candle. Number two, trend line. Drawing trend line through candlestick wicks. Don't let it touch. Don't let it touch the. Don't let it pass through the wicks or the body of the candle. Or the body of the candlesticks. Don't let it pass through it. Let it just touch. It's just sufficient. It's in point one and point two that you use to draw your trend line, whether 2 peaks or 2 troughs, are very important. And then you draw it and go to wait for it in the future. Very important. So drawing trend line through the candlestick wicks. Do not draw trend line through the candlestick wicks. And that's the mistake a lot of people make. And so they lose money because they will not be able to get accurate information in the future. They lose money. So trading with trend line. Number three of the common mistake that people make, drawing trend line that are not touching the wick. That's another thing. This thing is not touching now. Why? Point one and point two is not touching. It has to touch. It has to be pinpoint connect. There must be a pinpoint connect of the 2 peaks and troughs. There must be nothing missing. Nothing must miss. Nothing must miss. It must touch. Number 4, there are times some people keep already breached trend line and not drawing a new one. Sometimes they fall in love with their trend line, they don't want to do another one. Sometimes you see a trend line that's fetched you a lot of money, and then price already passed it. It has breached. It has been significantly breached. And there's no need keeping it anymore. There's no need keeping it anymore. Just let it go. Delete it and draw a fresh one. But then note the word significantly breached. When a trend line has not been significantly breached, price can still obey it in the future. Keep it. Keep it. So when a new trend line is significantly breached, delete it and draw a new one. But if it has not been significantly breached, do not delete it yet. And then always make sure you draw a new one, because if you don't draw a new one, market will pass you by. I'm telling you. I've experienced these things before. So listen to what I'm saying now. This look theoretical. It look theoretical, but then they determine a lot. They determine that you're going to make money in the market or not. They determine a lot whether you're going to make money in the market or not. Sometimes you're not drawing a fresh trend lines, because you just keep drawing until there is one trend line that the price will obey, or that will give you the setup that you anticipate. So important. So don't keep already breach trend line, draw a new one, and then because if you don't draw a new one, market will pass you by. Now, question: how to draw correct trend lines? How to draw correct trend line. Now, step 1, identify obvious peaks and troughs. Identify obvious and trough. Okay? In an uptrend, identify obvious troughs. In a downtrend, identify obvious peaks. I'll repeat again. When the market is going down, what you're going to be looking at is using the peaks to draw trend line. When the market is going up, you're going to be using the troughs to draw trend lines. Now, the word obvious is very important. The word obvious is very important. See, if you are doing trend lines, you are struggling to get the peaks. The peaks are not so conspicuous. They're not so, they're not significant. You might miss out in the market. And because why do you have to draw a peak, obvious peaks? Why? Because you see, the reason is that one of the things that you always keep in your mind is that you want to make sure that your setup tallies with what millions of people are looking at all over the world. What tallies with what everybody is seeing all over the world. And that is the essence of trading professionally. Why? Because the market will move in the direction of volume. Markets, and because you are looking at how trend will be generated. So if what you are saying is what millions of people all over the world are saying, so when you see that they are all saying it, it means they will act the same way you are acting, and price will move a great deal in your direction. Why? Because everybody, if you say, okay, you should buy here, everybody all over the world is buying, because professional traders, they use trend line to trade. Everybody looking at what you are looking at, because you are picking obvious peaks or obvious troughs to draw your trend line. But if you pick troughs and peaks that are not so obvious, they are hidden, you are struggling to see them. They may not always act well, they may not always be obeyed or function or give you, price that you want. And let me add this. The higher the time frame, the more it can be. The deadline you draw in 1 hour is more powerful than the one you draw in 15 minutes. Powerful than the one you do on 5 minutes on trend line. So identify obvious peaks and troughs. Number 2, connect a minimum of 2 peaks with a line from left to right. This is a downward trend. Connect a minimum of two peaks, minimum of 2 peaks from left to right. Connect minimum of 2 peaks from left to right. Minimum of 2 peaks from left to right. And that is a downward trend. That is a downward trend. And then connect a minimum of 2 obvious troughs with a line from left to right. This is an upward trend. Upward trend. That is it. This is the thing that you must never forget. So number 3, note that this is just a note. Note that significant and obvious draws global attention. That is exactly what I'm trying to tell you. Because you must draw something that majority of people all over the world will be able to see clearly. They must be able to see it clearly. So when they see it clearly, it means that millions of people all over the world will be taking the same decisions as you, and that means it will push the price in your direction and you make a lot of money. Meaning majority millions of traders all over the world are watching for the price reaction at the touch of trend line. So you should expect explosive movement. That's the beauty of trend line. Why? Because professional traders use trend line to trade. So if you drew obvious peaks and troughs and you draw your trend line from there, and then you are most likely the price will move fast in your favor and you're going to make profit. So obvious peaks and troughs are the trend line that you draw all the way from 1 hour time frame upwards. 1 hour time frame. Let me say 15 minutes upwards. But you see, 1 hour time frame is so important. 1 hour, 4 hours. And then when you draw it, a trend line on daily time frame, that will be massive. That will be something else. Okay. So, and that is the theoretical part of it. So trend line goes like this. Okay. I draw, you look at obvious peaks, this is obvious trough now. This is a trough, this is a trough, this is a trough. And then drawing the trough, making the trend line to join 2 obvious troughs. This is obvious. This is obvious. The trend line is joining it. And then you're looking at in the future, if price will get there and obey the trend line. If price get to this trend line and obeys it and move to the upside, it is called trend line bounce. It's a trend line trading, trend line bounce. I used to call it TLS, trend line strategy. A trend line strategy is important. So what happens is that the third touch is where you'll be looking at to enter profit in the direction of the overall trend, the direction of the overall trend. Okay, it's so important, so important. Then you come to this now. Now look at it. This is the first point. This is the second point, and this is where you're going to be looking at. And then the third touch of the trend line is where you'll be looking at in taking a trade. And this is one of the this is one of the example. It's a remarkable example. It's an important example. So you see something like this, you draw, you have seen 2 obvious peaks. This is peak 1, this is the point 1, then the point 2. At this touch of the third point, and now I'm even seeing a reversal candle here. One of the candles I'm going to be teaching you, I think I've taught the other class. This is the bearish engulfing candle. This red candle has completely engulfed. If I see this kind of candle, I'm happy to be here when this candle is formed. I can risk a lot of money on it. I'm telling you, I will risk so much. I will risk because it is an A plus setup. I'm telling you, A plus setup, A plus setup. And I come to this is the downward trend line. Now, when you join 2 peaks and 2 troughs successfully lower than each other, 2 obvious peaks, when you join them together, and then the third touch is what you are looking at as an entry. That is how to treat trend line, and this is called trend line bounce. I mean, the price touch it and bounce back. The price touching it and bounce back. It is called trend line bounce. And so here now we see another reversal candle. We see a long-legged doji reversal candle in this place. Don't worry, I've not taught your class. We're going to be here. We'll get there very soon. So this is a long-legged doji telling me that look, oh, this pullback is ending. Price is about to move in the direction of the overall trend. So I'll be entering trade here, then I'll be entering a small trade here. At least I will have broken even. Of course, my take profit will be here. At least I will have broken even some way, somehow. Okay. And then I come to another line here. I see my first point. I see my point one, and I'm seeing my point two. Then the third touch. The third touch is where I'm looking at to enter, to short the market. The third touch is where I'm looking at to enter a sell on this market. So if this give me the point one, this give me the point two, and then on the third point in the future, the price is rejecting here. The price is bouncing back from the trend line, and then I'm going to be entering a sell at this point. That's his trend line. Every time you see something like this, just know that it is ready to deliver dollars into your pocket. It's ready to give you dollars in your pocket. So if you draw it on 15-minute time frame, is amazing. You draw it 1 hour time frame, is amazing. Draw it on 4-hour time frame, is remarkable. But if you're a scalper, you can draw it on lower time frame, like 5 minutes and the likes. But you see, I draw it the more on 15 minutes upward, 15 minutes, 1 hour. Remarkable, remarkable, remarkable. Okay, and that is it. So the higher the time frame, the stronger and the more reliable, the price will be. Because see, if you are targeting majority of people all over the world, looking at the trend line, you need to know that, okay, these big corporations, they wouldn't have been trading on 5 minutes now. They would have been trading on 5 minutes, 1 minute now. No, I'm talking about banks that put billions of dollars in the market. They wouldn't have been trading on 5 minutes. They would have been analyzing their market on 5 minutes. So draw it 15 minutes, 1 hour, 30 minutes is okay too. 15 minutes, 30 minutes, you can do your trend line those time frames, and then but then you can do your trend line on higher time frame and your entries on a lower time frame. Because sometimes if I draw a trend line on 4-hour time frame, I'm looking forward to entering market on 1 hour time frame. Sometimes I draw a trend line on 1 hour time frame and I switch to 15 minutes to see my reversal candle formed on 15 minutes. Then I enter my trades straight up, straight up. So that's how it works. That's how it works. It's important that we understand that. Just like just one line that you draw that connects obvious peaks or troughs, and then you enter, and then when the price get to that place, it bounce. It will not always bounce. That's why you now watch for a reversal candle formed at the area you're expecting a touch or you're expecting a bounce. Certain reversal candle that when they are formed, it's always amazing. It's always it's a signal, a very strong signal, confirming while you should enter to your anticipated or towards your anticipated direction. That it works. Okay, so let me show you one or two examples, on the screen, and then we'll continue from there. Continue from there. Continue from there. Okay. Okay. All right, let me quickly share my screen with you. Okay, let me share my screen. I hope you understand everything I've been saying. I hope my screen is clear to you. I hope network is not breaking. All right. So let me share my MetaTrader. All right, I believe you can see my screen now. All right. And there's something very important that when we were talking about trading financial, based on the strategy I've taught you before. Okay, I've taught you how first of all you determine the trend of the market. As a trend formed, I didn't know the trend. I'm only looking for where to join the trend. For example, if you look at a market like this, look at something like this, and then you're already seeing that the market is already selling. It's already selling. It's making lower highs and lower low, lower highs and lower low. It is the sell I'm looking for. I just don't know where to enter the sell. Don't never forget that. I just don't know where to enter the sell. It's the sell I'm looking for. Okay. So if I'm to use trend line to determine my sell, okay, then I'll be drawing my trend lines. Okay, look at it now. The market is already buying. The market is buying. And so every single opportunity I have to draw trend line, I'll be drawing it. Tell you I'll be drawing it. And then look at this. Look at this. This is my point one. This will be my point one. This will be my point one. And then my point two next to it. By the time this point two is formed, I've already drawn my trend line. Then I'll be waiting for it in the future if price will obey it in the future. And then guess what? At the third touch here, I'm seeing green candle telling me I can enter my buy and ride on it. And whether you buy around here now, whether you buy around there, at what's come to what? Let's say you enter your buy at this green candle, and then see how many pips that you have. You have 53 pips, and by then you'll have even, of course, break even and trade your stop loss a little bit. Okay, then you have it, you know. So what you do is you keep drawing it, After you have identified your direction, you keep drawing it and watch if your trend line will be obeyed. Okay, if your trend line will be obeyed or it will not be obeyed. If it will be obeyed or it will not be obeyed. See how you will know if it will obey is the reversal candlesticks that you'll be seeing on your charts. Reversal candlesticks that you'll be seeing on your charts. Already I know that this market is already selling from here. We're on a downtrend. So how do I join the downtrend? 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 Okay, you can see from here now, point one, point two, point three, point four. Here now, the market is going to definitely. I'm going to be selling here. I'm going to be selling here. Okay, I have the point one. I have my point one here. Then I have my point two. And of course, at the third touch here, I'm already seeing doji and a bearish reversal candle. Then what happened here? I'm going to be entering a sell here. I'm going to be entering a sell here. And after entering that sell, see the great deal of price moving. Can you imagine? Price move 206 pips. 206 pips. So if you, let's say you miss this now, and then the price is here, I have another. This place now becomes my point one. That place becomes my point one, and then I have my point two in this place. I have my point two in this place. Then at the third touch, is where I'll be looking to sell. And see here now, I'm seeing this candle here. Now we're entering a trade there, and definitely as a day trader, I will enter my trade somewhere around here, and that will give me that's 30 pips, 30 pips already, and I'm already winning. And that's remarkable. Okay. You can see the same thing. You can see the same thing here. You can see the same thing. Okay. My point one here. My point one is there. Then I have my point two in this place. I have my point two in this place. at my point 2 in this place. Then my entry is here. There's a rejection. The price has been rejected at the third touch of the trend line. The third touch of the trend line. The price has been rejected. So from here now, the moment the price touch this same trend line, okay, there's a rejection. So the moment I see rejection, I know price is about to move to the upside. Price is about to move to the upside. And so I will enter. The moment I see this rejection, as an aggressive trader, he has already entered a buy from here. But then as a conservative trader, usually what I would do is to switch to lower time frame. This is when I now switch to 15-minute time because I'm doing on 1 hour time frame. If I see reversal candlestick, a bullish reversal candlestick on 15-minute time frame, I'm entering a buy straight. Buy straight. That's July 22nd. Let's go to 15 minutes. July 22nd. Okay, you can see here now. Here now pin bar. Then I'm seeing a pin. So I'm really seeing doji. This is a doji. This is a spin, another pin bar. I'm seeing another pin bar. At the end of this pin bar like this, I will have entered a buy. I'm telling you, this is most likely where my entry to trade this signal. My entry will be at the end of that, somewhere around here, as a conservative trader. I can see how many periods that this trade went. It went as far as 98 pips. 98 pips on GBP USD, 98 pips. And then it goes on and on and on and on like that. Now, let me quickly add this I've mentioned to you before. Let me quickly add this. That you see, when the slope of the trend line is also very important that you must take, is steep. When the price is steep, the market is not likely to obey it multiple times. Obey it multiple times. Price not, it's not so likely that the price will obey it multiple times. But when the trend line is gentle trend line, not so sharp. Imagine a trend line like this. The moment you see a trend line like this, that the angle is like this, the angle is like this. The price touch it, and then price move again, touch it again, then come back to touch it again. Then if it's going to obey it, if it you're going to obey it again. If it obeys like this, if it obey it once like this, I mean, here now you'll be taking a buy. You'll be taking a buy. You'll be taking a buy from here. If you take a buy from here, it's not likely that the price will obey it again because see, price does not always able to sustain a steep price like that. It's not able to sustain a steep movement of price. Market does not easily sustain that kind of price. You discover that most time price will break. It will just break to the downside and move downwards. Okay, so that's another point I want you to take notice of. So that is how to use trend line to trade. Don't worry, I'll still give you much more video because I want to program your mind. I want to program you to make sure that you learn it. You learn, not just bring it into your subconsciousness and making sure that you learn it very well. Okay, so this is the video for tonight, and then I'll see you again tomorrow. So the assignment I want you to do, there's an assignment you must do. The assignment is pick any instrument of your choice and use 15 minutes to 1 hour time frame. Draw me 10 instances where there's a trend line bounce and the market obeys the trend line. Where there's a trend line bounce, where you'll have taken a trend line based on when you have taken. So that's what I want. That's the assignment. 10 assignments, 10 of them, 10 instances, 10 screenshots. You send it to the group or send it privately on WhatsApp. All right. That's the training for tonight. Okay. If you learned something tonight, I like to just type 3 in the comment section. If you have learned something tonight, just type 3 in the comment section. Just type 3. If you have learned something tonight, let me be sure someone is following. Oh, that's beautiful. Okay. Please type in 3 in the comment section if you have learned something tonight. Oh yeah, it's all right. So I'll see you again tomorrow in class. I'll see you tomorrow in class. Good night, everybody. Thank you.